Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. We'll look at commodities in their own video, probably tomorrow or Sunday. We've got a long weekend, plenty of time to prepare for next week. No trading in Canada or the US on Monday. So we didn't break the August range at the end of August. So we're now going to be looking towards September for a break of that range. And it was the kind of morning where, again, I like to eliminate half of the equation to start the day, where I can say, if I'm looking for entries, so if we're already in entries, if you're in bullish positions, you're obviously very comfortable, and navigating the trading day it's a little bit less, it's more clear. You're just monitoring your positions, you're watching the hourly uptrend, you're watching the daily uptrend, whatever time frame you're trading on. In this instance, if you're looking to establish positions, that's where I like to eliminate one direction or the other. So if we're seeing a second gap up open in a row on SPY, I can say to myself, I don't like the risk to reward of entering any bullish positions at this level. And I'm speaking of all the names that are correlated significantly to the S&P 500. And if we look at the RSI levels, SPY, when we saw the open today, the RSI was over 70. The 4-hour RSI was getting up towards 70. And again, just a second gap up open in a row, right to key daily resistance, not a time to be entering long. So in a recent video, sometime this week, I was talking about how an example of if the S&P 500 broke its resistance, but QQQ did not break its daily resistance, then we have to take the SPY break with a grain of salt and not really believe it as much. And that's exactly what happened, in the sense that 294.15 is the highest price we've seen on SPY in pretty much a month of trading. We got up to 294.24. We broke resistance only by 9 pennies. That's not convincing in any way, shape, or form. But we broke that level. But if you looked at QQQ on the daily, 189.68, 189.46, we rejected from 188.97. We didn't break resistance. So again, looking at the major sectors that make up the holdings of the S&P 500 helped me to identify fake outs. So someone maybe was sitting there saying, I'm going to buy this break of 294.15, and they made the worst possible entry this morning by going long. That's why knowing what the shorter term time frame RSI levels are, knowing that buying the second gap up open in a row is a bad idea, knowing what QQQ is doing and watching its resistance, those are all little clues that can tell us I should probably either be looking bearish or be waiting for a better bullish opportunity. So we rejected right from resistance on SPY. As far as I'm concerned, that's now essentially a triple top at 294, and we're looking to pull back and see, can the bulls hold 285.25 to form a higher low and to stay within this tightening range? I believe that we will. I believe that we could even stay within this range all next week. 4 trading days next week, a shortened week because of the holiday. We may stay in this range. So looking at it on the hourly time frame, solid pullback today, a little bit of a bounce that just formed a lower high, and then we held support at the end of the day. So we're going to be looking at 291.42 on Tuesday, and if 291.42 breaks, that is a clear rejection, and the higher low will be scouting somewhere in the mid to upper 280s. IWM, just a daily lower high. Every single bounce, a daily lower high. So 150.108 was the key resistance. We got up to 150 essentially, and now we're looking to pull back. This is a setup for the potential of an inverse head and shoulders pattern, where if the bulls are going to shift momentum, we're going to have to see this as the left shoulder. We did drop down to a lower low here, although not by a significant amount. Fail to break the neckline of 150.108, pull back for a daily higher low, and then change the trend. So a higher low and a higher high is what's needed to change the daily trend. So if we pull back and break the low of today on Tuesday, have to hold 144.25 for the higher low, and then we would have to break 150 for the bulls to change the trend and change that momentum for the first time since this significant drop back to start August. So QQQ, still a tightening range, rejecting from resistance more clearly than SPY. If we drop down and break 186.41, the low of today on Tuesday, there's a gap at 185.40. And the most important support level for me is the low of the dump day last Friday. There are other support levels Same with SPY. This is a support level at 285.25, but the most important short-term support for me is that dump low from 283.47. So for QQQ, there's a support at 182.91. Bulls holding that level would be the best in their interest, but for me, the most important support is 181.56. Financial sector. We broke some resistances. That's a great start. We have to change the daily trend. We have to form the higher low and higher high to get the follow through and see that momentum shift. So pretty much I'm watching IWM and XLF because those names changing the daily trend would give me confidence that the S&P 500 bull break can have follow through. So again, same thing. Double bottom down here at 25.92. That's the most important support on XLF. If we break the low of today on Tuesday, have to scout the daily higher low. The daily higher low will be found when the hourly trend changes back to the bulls. That's the most common scenario for finding that daily higher low. And then we would look for the potential of continuation. So step number one, first thing I'm watching next week, when I wake up Tuesday morning, open up the computer. Are we holding the lows of Tuesday? If the answer is yes, that's the most important short-term support for me. If we break the lows of Tuesday, or the lows of Friday on Tuesday, then we zoom out to the daily chart and scout, can these bulls form a daily higher low? So I already know how I'm going to be viewing first thing next week. XLV, same thing, 91.69 was resistance, unable to get over that level. Bulls want to pull back and hold 88.72 for a higher low and then change the daily trend. And short-term support, 90.21, low of today is important on Tuesday. XBI, also still very clearly in a downtrend, probably the most clear downtrend out of all the names. And anything under 83.74 was just a lower high. We got up to 81.52. Bulls must hold 78.31 and then break resistance to try and change the daily trend. And let's wrap it up with the VIX here. So the VIX forming a higher low. And this is where it's going to get interesting, because if the VIX can break its resistance of 2160, or at least break the level it came from, the highest point this week, that is the most clear daily trend change that we've seen at this point. Keeping in mind that the moves that VIX has are fast and swift out of nowhere. We don't usually see trends. We don't usually see uptrends for the bulls. They don't last long. In this instance, this bull move from the end of July into August, we have not changed the daily trend at any point in time. We have no daily higher low and higher high. Higher low, lower high, lower low, lower high. Trying for a higher low. And if we break this level of 2160, that will be notable to me. And if that does occur on the VIX, that likely means that SPY is headed back down towards this 283.47 support from Friday. So expecting the VIX is going to tighten up as well into the first couple of days of next week. And we'll take it from there. So again, always one day at a time. We know that the bulls have more favor than the bears right now, just because in order to see a clear break of this August range, we need about $2.50 from where we closed today. And in order to see a clear bear break, we have to drop $11. So a very big difference in terms of where we stand. That will change again. We'll go right back to the middle of this range if we see the lows of today break on Tuesday. So that's the most important thing for me going forward. Keeping an eye on the commodity space. Again, you want to watch that video if you are open to trading other markets, because there is opportunity fast approaching in the natural gas and oil commodity space with the leveraged ETFs we're going to be watching. Certainly still interested in the marijuana sector, although it's very slow going. We know it's only a matter of time before that sentiment shifts. And thinking about doing a video comparing the marijuana sector to the cryptocurrency space, because they play off each other so well in terms of, well, we've seen this pattern 3 months ago in crypto, and now we're seeing it in MJ, just because they're new sectors. There's a ton of emotion. There's clear major cycles going on in both spaces, and I think there's a lot we can learn from that. I learn a lot from crypto that I apply to MJ, and I learn a lot from MJ that I apply to crypto. That's basically what I'm watching into the fall here, and we'll continue to go over it day by day. So I appreciate you watching. Hope you have a great long weekend, and I'll keep posting videos day by day. See you soon. Do good things. That's that.